has joined, and so we can quickly take off. Joseph, you're welcome. Thank you for joining us this morning.
Thank you. Thank you. Now I can hear you loud and clear. Hi, Issaka and Madhawa.
Hi, Maji.
Hi, hello, Joseph. Welcome.
Hello, Joseph. It's good to hear from you. Thanks for joining us this morning. And we're getting started right about now. Thank you so much. And so once again, a big thank you to every one of you who have joined us this morning from the comfort of your offices, your homes, in your cars, wherever you are. We want to say a big thank you. This webinar is being put together by the Chartered Global Investment Analyst Institute. And just before our moderator, who happens to be Issaka Ibrahim, takes over, I'm going to do a 5-minute presentation on what the CGIA is all about. If you're here and then you already know about the CGIA, bingo, but if you do not know, then I'm excited to give you as much information as you may need about the CGIA. And so if you would permit me, allow me to share my screen with you so that we can get started. Thank you very much. I suppose everybody can see my screen at this point. Issaka, the speakers, let me know if you can see my screen so that I can get started.
I can see your screen. Very
Great.
nice presentation.
Okay. Thank you, Issaka. Thank you. That's fine. Okay. All right. So, like I mentioned, the CGIA Institute basically stands for the Chartered Global Investment Analyst. And most of you might be wondering, what is CGIA all about? So it is an online and membership-based professional body of finance and investment professionals. And so it's a professional qualifications for people who want to pursue finance and investment on, on a much greater level. So that's basically what it is. And what the CGI basically does is that it sets global standards for ethical investment practices for the finance and investment management industry. This means that the CGI is so huge and big on ethics, and anybody who happens to be a part of the CGI, be a part of this professional body, you are mandated and you're obligated to uphold ethical practices in your line of duty as a finance professional. And the designation that the CGI gives is the Chartered Global Investment Analyst designation. And so once you're able to go through all the phases of the CGIA levels, I'm going to take you through it. You are awarded what we call the CGIA designation. You become a CGIA charter holder. Fundamentally, the CGIA Institute is headquartered in New York. However, we have various offices scattered across various parts of the world. In Ghana, I'm currently speaking from an office in Ghana, which predominantly controls most of the activities that are done within the African domain. Okay, now let's get into why the CGI Charter Program and what does the CGI do to you? Why do you need it? Whether you're a student, whether you're a professional, whether you are, a new entrant into the professional scene, why would you need the CGIA? Basically, what it does is that it takes you deeper in knowledge, gives you credibility in your field as a professional, and helps you, become, a very credible professional in whatever you do. You may have a first degree, you may have a master's certification, but the truth is that once you add on a professional qualification, what it does is that it gives you another platform to stand on, and then it distinguishes you from your various, from your peers. So it gives you practical knowledge, just like I mentioned, gives you a strong foundation for what you're doing. And so with the professional program, the CGIA, we are not just about the books, just about learning the intricacies of finance and investment. What it does is that it gives you deeper understanding into the real world of finance. It gives you real-time updates of what is happening in the financial sector in various aspects of the world. So it keeps you up to date in your profession so that at all times you remain evergreen and ever so relevant to the industry that you work in. And then you have the opportunity to get closer. You have access to a pool of network who is not just in your local state, but you have a network, a global network of people. The speakers we have today, we have Issaka Ibrahim, who happens to be the General Manager for Metropolitan Pension, is a charter holder of the CGIA Institute. You get to connect with someone like this. You get to connect with someone like Joseph Maji. Maji is all the way in Tanzania. He is a charter holder of the CGIA Institute. At the right time, the moderator will give you a very detailed profile of who he is. And so these are the people we're looking at. You get the opportunity to connect with all these people across the various continents of the world. Okay, and so what are the membership types that one gets to associate with once you become a CGIA member? So first of all, we have 3 different types of membership categories. Number one, we have the candidates, we have the charter holders, and then we have people who we call fellows. So for the candidates, there are people who are still, in the process of attaining their certification. So these people may still be writing the exams. They may be in level 1, level 2, or level 3, or they might have even finished, but yet haven't been awarded the certification. They are still candidates. All right. Today we have a lot of candidates joining us. We have candidates all over, across the various places. We have candidates in Ghana, Nigeria, Bangladesh, Canada. We have candidates all over the world. Like I mentioned earlier, the CGI Institute is an online and membership-based professional program. So next we go to who we call the charter holders. So I mentioned that Issaka is a charter holder. I mentioned that Joseph is a charter holder. These are people who have been through all the levels of the CGIA. They've been through the exams and then they've been deemed, worthy of the certification. These people have a lot of experiences in the industry. And so they are done with their exams. They are no longer candidates. They've been certified. They have the 4 letters CGIA after their names wherever they go. Those are the people we call charter holders. They are the various managers of industries, academia, finance, insurance, and they're all over the place. And then the last category, which happens to be our highest level of membership status, is what we call the fellows. Now, these people, they are distinguished professionals who are identified and are awarded. They might not have necessarily gone through the CGIA program. What happens is that these people, because of their credibility, because of their credentials, because of the influence they have in the financial domain and the kind of relevant contributions they are doing, the institute can identify them and then confer on them the fellowship status. Or these people, once they see, they could also reach out to the institute to say, okay, I think I would want to be a part of your fellowship category. That's basically, so 3 types of membership the CGIA has. Membership eligibility. What makes you qualified to become a CGI candidate, charter holder, or a fellow? Now, the CGI program is, let me say, fundamentally opened up to a wide range of people across different skills, different academic backgrounds. And so it's not limited. Let me just clarify this. You do not have to be in the finance sector to be able to do the CGI. Probably you are in a different industry, but then you're trying to do a shift. You're trying to know more about this industry. You are good to go. You are still eligible to be a part of the CGI. However, what happens is that once you do not have a background of finance, you would have to start from the scratch. But the advantage that people who already have a financial background have is that what they do is that they get the opportunity to be exempted from some of the papers. And so they don't go from level 1. Probably they may skip level 1 or even skip level 2 to level 3. But ultimately, the CGI designation is opened to all and sundry. Fundamentally, you have to be a degree holder. Maybe you're in the university, and then from university, whether you're a master's student or you're done with your master's, you are all qualified to be a part of the CGIA. CGIA examination. Okay, what does it take to become a CGIA charter holder? Let me first of all say that there are three, there's the first level to get on board the CGIA. So first of all, you go to the website. I'll share the website with you along right there in my presentation. You go to the website, and then you will see inscriptions like register now, join us. Once you click on that, you're able to do your registration. Now that leads you to your first CGIA fees, which we call the enrollment fee. Now the enrollment fee goes for 168 USD. And once you're done with the enrollment and then you officially become a member, you attain your membership ID and your PIN that gives you exclusive access into your membership portal. What happens is that you would have to go through 3 levels. The CGIA is structured in 3 levels. That's what I'm going to take you through right now. The curriculum consists of 14 examinable papers structured in 3 levels. Now, level 1 has 4 papers, level 2 has 6 papers, and then level 3 has another 4 papers. Summing it up, we have 14 examinable papers. Candidates must pass all 3 levels and satisfy all obligations before the CGI designation is awarded to them. Pass mark for any exams you write with the CGI is 50% from level 1 to level 3. You don't have to get a 90% to pass. If you get a 50%, you have passed the exams, and then you can move to the next stage of your examination. So CGI exams is actually offered 4 times in the year. In January, we have a set of people writing their exams. And I must also say that, like I mentioned earlier, is an online and membership base. So online, almost everything we do have been moved to our e-platform. You do your registration online, you do payment online. Exams, you write the exams in the comfort of your home, in the comfort of your office. You do not have to walk into an exam center. You write the exams wherever you are, whenever you want to take it. However, it must be within the specified examination period we have, which happens to be January, April, July, and then October. And so, like I mentioned earlier, in January, we had a set of people writing the exams all over the world. And so the next examination will take place in April. So when you go to our website, you realize that April registration is ongoing. So if you're here and then you are thinking of taking the CGI exams, I think if you're thinking of taking it in April, then this is the right time to do so. All right, so like I mentioned, level 1 has 4 papers: investment 1, corporate finance, FRM, and then alternative investment. Then you go to level 2, which is a build-up from level 1. Investment 2, corporate finance 2, you're looking at financial reporting and analysis, portfolio management, derivative, and then investment ethics. Then level 3 has another 4 papers, that is derivatives, financial reporting, portfolio management, and then investment ethics too. What is the exam structure like? For each one of the exams you write with the CGI across all levels is multiple choice. And so in level 1, you write 70, you have 70 multiple choice questions, and then you write the exams within a 2-hour duration. Level 2, you write, you have 100 multiple choice questions, and then you write the exams within a 2.5-hour duration. Level 3, you have 140 multiple choice questions, and then it says written within 3.5 hours duration. Fee structure. So I already mentioned the enrollment fee. Now, when it comes to the main exams, this is what the fee structure looks like. Level 1, early bird registration goes for 45 USD per paper. And so, like I mentioned, if you're thinking of writing the CGI exams this month, then you are within the early bird period. So you get the opportunity to save a whopping $15 so that you don't pay the standard fee. You pay the 45 USD. And so if you're here, look sharp if you want to write the exams coming April, come April. Level 2, each paper goes for 65 USD. And then of course, if you delay in registering and then you register late, you would have to pay another $15 increment. So it's going to be an $80 instead of $65. Level 3, each paper goes for $80, but then if you delay, another $15 has been added to it, like I mentioned. I'm sure some of you are wondering, okay, I've already done this. I'm a chartered member here, have a first degree. Are there exemptions available? Of course. Here is the good news. We award exemptions to candidates who probably have studied part of the CGI curriculum in a previous qualification. And so, like I wrote here, exemptions allow you to start the CGI charter program at a level that is consistent with the knowledge and skills you gained from previous learning and qualifications. All right. So if you have maybe you have done your first degree in finance or in accounting, in banking, and probably you want to study the CGIA, you are qualified to be exempted from some of the papers. We have a qualified team that is going to, look at the exams you've done, the kind of qualifications you have, and then they will bring the exemptions that you deserve to you. They'll send it via email, and then you can start the papers after that. And so, yes, the final exemptions I'm going to talk about is what we call the SE Gateway. Some of you may be here, and then you have over 12 and beyond working, years, and then you have an MBA, you have a master's degree, you've done your master's already, and then you are qualified for this charter gateway. What happens is that the CGI designation is awarded to individuals through two major routes. So we have the regular routes, which is what I talked about, writing the exams or getting part of the papers exempted to you. The last one happens to be the SE Charter Gateway. For that, is awarded to people who have been in the industry for long. They've been working for long, and they have, some impressive academic qualifications. And so these people are exempted from all the papers. And then all they have to do is that they would have to go through our mandatory continuous professional development program. So like I mentioned, this is the eligibility, 12 years, you have a master's, then you're good to go. All right, begin your CGIA journey today. This is the registration link. If you want to join the CGIA today, you want to visit our website, or you want to send us an email, we'll respond to you. And so I want to say a very big thank you. I'm looking forward to having some of you who didn't know about the CGIA become a part of the CGIA. Once again, my name is Gifty Boatman, and thank you so much for your time. And at this point, I'm going to allow our moderator, who happens to be in the person of I'm going to allow our moderator, who happens to be in the person of Issaka Ibrahim. He's going to take us through this today's session, the webinar on the Finance and Investment Outlook 2024. We're looking at the challenges, we're looking at the opportunities, and then we are looking at the prospects available. I'll read a brief profile of Issaka, and then Issaka can take over from here. So Issaka Ibrahim is an experienced professional with over a decade of dynamic leadership in the financial industry. He's currently serving as the general manager at Metropolitan Pensions, Ghana. Ladies and gentlemen, wherever you are, with a resounding virtual applause, I make welcome our moderator for the day, Issaka Ibrahim. Issaka, your audience, your moderator.
Hear me?
I can hear you, Issaka. Can you hear me? Yeah, I can hear you.
Yes, thank you very much, Gifty, and good morning to everyone once again. I warmly welcome you, and indeed, it's truly an honor to be your moderator for this session. I want us to just begin quickly, but before we begin, maybe I want to test our audience a bit and pose a question to everyone on call. So the question is, if you could sum up your experience or sentiment of the financial sector or the financial landscape for 2023 with just one word, what word would that be? So I just want to hear from our audience or everyone on call. I've just posted the question in the chat, just to hear from everyone. If you could sum up your experience or sentiment of the financial sector for 2023, what word would you use to describe your experience of the financial sector? Let's see what words we'll be getting through from our audience. We are still waiting to have people comment. As we are waiting, I'll just give an overview of what we are expecting for this webinar today. So ladies and gentlemen, as we are all aware, the financial sector or the financial landscape is expected to be really, really unsettling this year for many reasons. For instance, we've seen central banks trying to fight inflation with the monetary policy rate. We've seen a withdrawal of fiscal support amid high debt, for various countries, which weighs on economic activities. Inflation is falling very fast and expected to continue in 2024 in most regions, amid the supply side issues and restricted monetary policy in various countries. If you check the global headline inflation, it's expected to fall from 6.9 as at the end of 2023 to 5.8 in 2024. Again, the year 2024 is designated as an election year, ladies and gentlemen, with over 70 nations participating in elections in 2024, including 16 African countries, Ghana, South Africa, Namibia, recently Senegal, who are going through a certain turmoil because of elections. If you look at the Americans, about 11 countries in the Americas would also be going through elections, including the US, the Canada, countries like India, Germany, Russia, Italy, Turkey, and the United Kingdom would all be voting in this particular year. How are these going to influence finance and in the investment landscape in this particular year? These are some of the questions the panelists will be answering. Again, if you look at advancements in technology, with the rise of artificial intelligence, digital currencies, automated trading systems, this will all play a critical role in reshaping how financial transactions occur. Therefore, making decisions in investment and finance will be very far-reaching, impacting individuals, businesses, and the entire economies at a grand scale. So in today's webinar, we will be exploring the challenges, the opportunities, and the trends that will be shaping the finance and investment landscape in 2024. And I believe the panelists would offer very practical roadmap for individuals and professionals. I know that our esteemed panelists are ready to share their valuable perspectives on these areas. So without further ado, we will just get started, and I'll introduce our panelists for our audience. We are still waiting for the feedback on the financial sector. So I've seen dynamic, I've seen disaster, all coming through. Of course, we are still waiting to hear from you, the words that you use to describe, if you were to use one word to describe the financial sector in 2023, what word would you use? I'll proceed quickly to introduce my guest on call. So first we have Madhawa Edussuri. Please pardon me if I don't pronounce the name well, Pashan. So
yeah, Issaka, you are correct. But I prefer to call me Madhawa, my second name.
Okay, Madhawa. All right, sure. Thank you, Madhawa. So Madhawa is a passionate, approachable, and inspiring leader with strong values-based ethos that delivers experience. He's a strategic thinker, an influencer who ensures that stakeholders are engaged and motivated to succeed. He's a natural communicator with agile, open-minded, and innovative approach to solution finding. Mr. Madhawa delivers impactful solutions efficiently and effectively through strategic focus, inclusive leadership, and clear communication. A proven transformation champion that builds strong, empowered, and collaborative teams to deliver sustainable success. He has excellent track record in leading and managing complex operations across small and large organizations within membership, corporate, and public service environments. Hello, Mr. Madhawa. If you can just, show your screen and say hello to our audience.
Thanks, Issaka. Pleasure to connect with you all. And thank you, Gifty and the CGIA team, for inviting me and having me here. And also, I'm very much impressed about CGIA and its role, and other than CFA, Society and Corporate Finance Institute, this is probably CGIA may be the only body for development of financial sector, especially investment professionals fraternity. So I'm actually requesting CGIA team to think about other spaces like Asia and other regions as well. There are a lot of financial investment segment professionals all over there. And especially I'm representing Impact Investment Fraternity. There are a lot of investment analysts who are working hard, but you can promote this professional body among them to develop their career and give some value for them. So pleasure to join with this webinar today, Issaka and the team.
Thank you. Thank you very much. My next panelist or speaker is Mr. Joseph Maji. So Mr. Joseph Maji is a well-established professional in the banking and financial industry in Tanzania with over 15 years of experience. He has been a key player in the development and growth of debt capital markets in the financial sector in Tanzania. He is backed by a wide range of expertise and experience in the treasury and capital markets, on top of his strong abilities in the accounting and finance field. Mr. Joseph Maji is a chartered global investment analyst and a country lead promoter of the network in Tanzania. He's also a certified public accountant. He holds financial management dealing certificates and a certification in management developing programs with Stockberg University Business School. Mr. Joseph Maji also holds a bachelor's degree in business accounting and finance from the Zumbe University in Tanzania, and he recently completed the Executive Leadership Development Program offered by Strathmore University. You are welcome, Mr. Maji, and you can say hello to our audience.
Thank you, Issaka, and my fellow panelists and the audience at all. It's a pleasure to join this discussion and at least get the opportunity to share what's happening in the finance and investment industry. As you just put it very clear, there are so many dynamics which are happening across the globe. So it's an opportunity for us, professionals in this field, to at least share what solutions are there to take the opportunities and what are the threats to watch as we start the 2024. And our professional advice on the necessary do's and don't do so that we make sustainable investment, but also good returns on our investment. I think I'm more than excited to share the journey together with the audience and to be able to respond to any questions or clarification inquiry as we look at the global outlook for 2024. Thank you very much.
Thank you very much, Mr. Maji. Awesome, awesome. So we'll just dive deep into our discussion. And before we do that, I've seen another word come through. Of course, I've seen unsettling to describe the experience of 2023 in the financial landscape. Yes, of course. And we expect that to continue in 2024. So we'll just dive into our discussions and give our panelists some 15 to 20 minutes just to share their perspectives on the challenges, the opportunities, and the trends we are expecting in 2024. I'll start with Mr. Madhawa. So, Mr. Madhawa, your audience.
Thank you, Issaka, and thank you, Joseph. Once again, thank you, CGI team, inviting us, and happy to share our experience and expectations this year, 2024. So we, as I'm representing especially impact investment segment, as a consultant and advisory role we are playing throughout last 2 decades. So before starting 2024, we have to start from 2020, where everybody faced the pandemic situation. Started 2020, and it took almost 2 years where everybody faced affecting, still some segments, some industries still affecting. But 2023 gave us a year to settle in the economies, and for us as an advisors consultant, we see 2024 is the year of hope. So I think, as Joseph also mentioned, 2024 is more challenging year, even though it's going to be off of the year. We can see some geographies facing difficulties, some unrest started, especially Russian and Ukraine distress, and recently started Gaza Strip and Israel issue. So like that, so those kind of geopolitical and geopolitical issues affecting most of the economies. So we are starting the year with these kind of new issues, other than the typical challenges we are facing, especially the rising interest rate, inflations, and some of the economic facing some sort of labor issues like that. So I think the policymakers, regulators, decision makers have to play a key role to manage this situation, especially we are basically based in Asia, and I'm based in Colombo, Sri Lanka. So one of the country face both effects, both COVID as well as the economic crisis followed by the pandemic. So one of our policy making decision was taken 2022 was stop using fertilizer for the agriculture. It was a disaster. So it was that this policy decision affect entire countries, and we are still facing food shortage because of that policy decision. So we think that policymakers, decision makers, regulators, central bankers think vigilantly before taking decisions. So thanks for the current rulers. Now we are managing our economy, managing the situation, but all those things happen because of this decision making. So the 2024 all depend on this decision makers' decision based on. I'm not talking too much about the technical point of view. I think Joseph and Issaka will address the technical point of sight. So I'm like to sharing the practical experience where we have and where we can do. So as the opportunities, we always taking challenges as opportunity. So we see especially the sectors like the climate changing, renewable energy sector, food security, and financial inclusion segment will be the key opportunities for 2024, where most of the economies depend on small and SME level market. So we see this segment, financial inclusion, renewable energy, especially climate changes, and emerging segments like education and health sectors. So those are kind of potential and opportunities created because of the highlighted areas I mentioned. And the trend actually, this pandemic itself created to think about the technology side. Technology in the sense mean blockchain as well as the AI. Blockchain is a kind of a platform can use improving quality levels and access for the sectors, and AI is still in conceptual level some economies, but the focus should be this conceptual level should be coming to a commercialized level. So those are the key trends, and good thing is that even though the past 2 years faced some recession, some segments, especially banking, finance, and insurance sectors, shows some good performance even with the difficult period. You can see most of the public companies freely available data information. Even with the disasters, even with distress situation, most of the banking and financial sector cooperates making some good returns. So that's how we see as advisors and consultants 2024. As in the country level in Asia, we can see India becoming a powerhouse, and especially Africa. Everybody focus as a most growing region, especially Niger, Rwanda, Senegal, nominated as the fastest growing economies. Thank you, Issaka.
Thank you very much, Madhawa. I mean, you've really given a good view of how things are playing out, especially around the Asian countries. And I definitely know that Sri Lanka will also be going through elections this year, and it will be interesting to see.
One thing I need to add, as you clearly said, that the 2024 will be an election year for everywhere, even Sri Lanka also a presidential election coming up, general election coming up, and also the 2-3 days back, Pakistan also they hold their presidential election. So as most of the other areas, so everybody facing this electoral atmosphere and the feeling.
Yes. It's very interesting. With almost 70 countries going through elections, it's be interesting to see how the financial landscape would go. So thank you. We'll come back to the questions and for you, Mr. Madhawa, but I would like to also go straight to Mr. Maji to also share his, preliminary insights and perspectives on the subject of discussion. So, Mr. Madhawa, Maji, if you are ready, you can take it. Oh, I see he dropped. I'm sure his network is not allowing. But anytime he joins, maybe we would share. I mean, he will share his perspectives. So I'll go ahead with you, Madhawa, if you don't mind.
Yes, Issaka, I think we can continue until Joseph join. And as I said, the continent Africa, actually, because of this chaos, we also quite active in Africa region, even though we based in Asia, Sri Lanka. I mean, honestly, we are quite active in Tanzania and 7 other countries, and even World Bank and IFC. Projecting Africa region is most potential region, and I mentioned few countries: Senegal, Rwanda, kind of countries are most potential and highest growth expecting geographies and economies. And I think as certain things beyond our control, and most of the things depend on policymakers and decision makers, and that's why I put one practical example from our country. The one small decision make a huge havoc for the entire country. So those are kind of the areas beyond our control, and especially central bank, regulators, especially how to control the inflation and interest rate hikes will be a key focus areas depend on regulators and policymakers' hand. How do you see Africa region as a potential 2024 in addition to the political and election environmental?
So thank you, Madhawa. So I mean, let's start the conversation with some of the challenges that we are expecting in 2024. And from my side, I'll start with the things like inflation and interest rate. So in 2023, we saw that inflation in most countries almost became like a hyperinflation, and suddenly we saw that getting to the end of the year, it started dropping. You made mention in Sri Lanka where the policy around the fertilizer for agriculture, really impacted the economy. And I can imagine how if agriculture is impacted, how the whole food chain inflation is also going to be impacted, because of course, if the supply side is very low, that food prices are going to be high. And in most countries, food prices actually drive inflation. So with finance professionals and investment professionals on call, what sort of advice would you give in terms of navigating some of these challenges we are already anticipating for 2024 with respect to inflation and interest rate, government policy rates, trying to fight interest rates with their policy rates, for instance? What sort of advice would you give, and what sort of anticipation are you giving? And let me give you another context. So in Ghana, for instance, we've come from an inflation rate of about 50% to now almost hovering around 26-27%, almost halved within the space of a year. So you can just imagine how finance professionals would have to take some of these, would have to take investment decisions with very uncertain environments like Ghana and Sri Lanka. So I just wanted you to just comment briefly on what finance professionals are supposed to be doing in order to navigate some of these challenges posed by inflation and interest rates in 2024.
Yeah, Issaka, it's like that. It's true. Comparing Ghana and, as an example, Sri Lanka, two different geographies and two different reasons. And honestly, our inflation was skyrocketed last 2 years, but fortunately managed into single digit with different methods implemented by the Central Bank of Sri Lanka, especially the drastic decision we take, and also the support of IFC and the neighboring countries, India. They support us. But as a regulators and policymakers, we had to entire community, entire country has to contribute a lot, limiting imports and controlling the foreign exchange rates for a certain extent, and especially because that's how we manage the situation right now, come to a single-digit inflation within a shorter period, especially the controlling certain things. For that, as a population, as a country, people contribute a lot by patiently for the certain decisions. So that's why I always mentioning the policymakers' decision, central bankers, economists. So they have to think and act vigilantly before they're taking decisions.
Right. Thank you very much, Madhawa. I think my second question, I guess you also mentioned the elections that will be going on in Sri Lanka. India would also be going for elections. I know you are also surrounded by countries like Pakistan, and but we've seen recent tensions in sort of the geopolitical landscape. Israel and Palestinian, Gaza is in turmoil, and these are regions that surround your environment. And so talk to us about how investors can adapt to this dynamic environment when you are surrounded in a region where almost all the countries will be going through elections, and there may be tensions that would influence the investment decisions, you know, on a larger scale. How should finance professionals, you know, be able to go through these dynamics, you know, without necessarily affecting the portfolios of their investors or of their customers?
Sorry, Issaka, I face some kind of a network issue. Yes. Can you hear me?
Yes, I can hear you. I can hear you clearly.
You can continue. So you asked some last question from me.
Yes, so I was asking how finance professionals what should they be doing in terms of gauging the political atmosphere to help in terms of their finance decisions or investment decisions, you know, for the portfolio of their customers or their companies. Because I imagine that in Sri Lanka, you may have a lot of investments in India, you know, in your neighboring countries, and they are going through, you know, elections in 2024. What should they be looking at? What sort of factors should influence their investment decision in such a very geopolitical, you know, region, which can be very, very, very tense?
Yeah, actually, honestly, even though this election is coming in India is most strong country. Definitely, it's powerhouse of the Asia. Definitely this year, they already passed most of the economic indicators. Even though the thousand election coming, they put their fundamental, the basics are very strong. Their economic decision, economic policies are very strong. So the good thing is that whatever the government coming into the power, they are continuing the proper policies, proper measurement in place. But comparing in other countries such as Sri Lanka and some other countries, Pakistan, I think Bangladesh is more strong than two of us. For us, we are expecting a kind of hung government if things not going good. But this kind of situation as a financial and investment professional think about how to manage our portfolios and diversification and asset multi-asset portfolio focus is the best option, and especially the fixed income portfolios is the other thing. And as an investor's point of view, we need to call for a better return compared with the risk and the situations. So the multi-asset allocation and diversification is the best option for asset managers and investment analysts for this kind of situation.
Thank you very much. So ladies and gentlemen, we are still discussing the financial investments outlook for 2024. There's a Q&A provided for you. You can type in any questions as the conversation is going on, and I'm happy to pose it to our panelists as the conversation continues. Feel free to type in any question related to the subject we are discussing. Thank you. So, Madhawa, we will still continue. Unfortunately, our second panelist is still not been able to join. So we'll continue, right? My next question.
We would like to know more about the Africa region, how you think that I'm become a moderator now. So I prefer to how do you see the subcontinent and the region 2024?
Yeah, so I mean, in terms of the African sector, I mean, more especially the West African economy, it's been a bit unsettling for the past couple of years, from 2021, 2022 to 2023. I know you are aware that Ghana has gone through a debt exchange program, and still talking with our bilateral partners in order to get an IMF support program for Ghana. And it's caused a lot of anxieties. And for companies and for professionals who manage portfolios, either retail or corporate portfolios, it has been a very, tough times to explain to your clients, especially on what else are you investing in, right? Because I mean, in our economic class, we're made to believe that government portfolios are risk-free, and if a risk-free investment instrument, you go through a debt exchange program, and government bonds are substituted for, just 2 bonds, and you are going through a program where your average about 18-19% yield on your investment is supposed to be exchanged for an 8% yield. It becomes a tough conversation to have with your investors. And if there's an ultimatum that if you don't extend the program, you don't know what it will mean for your investment, then you are caught between a rock and a hard place, So, but thankfully, I think especially for Ghana, the Bank of Ghana has sort of tried to use the monetary policy to control the inflation. We've also have some stability in exchange rates coming through. So it generally been going down, in terms of the pressures and anxiety. But we still don't know what will happen, because now people are just going into the treasury bills market, which is offering some good yields. Yeah. But the question is, for how long would you be investing in the treasury bills? And even in the treasury bills, is the future safe for the treasury bills? No matter how short the treasury bill is, we never know. You've seen a lot of banks come up with other innovative products like the repo, where they are taking on the risk of the treasury bill and are allowing investors to buy in. But it's still a very uncertain environment we sit with as of now, at least from the Ghana's perspective. Yeah. So
one small question, Issaka, want
yes.
to ask from you as an investment professional. So you said, I think it's pretty much same. We and Ghana situation supporting IMF and other things to manage the situation. But you sounded the government pressure is kind of a risk-free. So having this kind of distress situations, how do you see this government pressure is as a secured in terms, sometimes can be a debt restructuring kind of thing coming up? How do you see that as a finance profession? So right now, currently we are facing the same situation.
Yes. So definitely. So I mean, if you look at finance profession, we are still sitting on the unknown. Thankfully, there's been some, as I mentioned. Hello, it's Joseph on the call now.
Yes, I'm back. Apologies, I was disconnected, but I think everything is on well. If anything, then I will contribute. Let's proceed. All
right, Joseph. So you've not missed much. I will just fill you in shortly.
No problem.
So Madhawa was asking questions about Africa and how we see the investment landscape. And the audience are still, putting in their questions. And I think if any of them is directed to any of the panelists, I'll be happy to share with you. When we came, we were just talking about the challenges, in the investment and finance landscape. So if you don't mind, you can also share from your view, your perspectives, what you see the challenges are going to be like in 2024.
Thank you very much, and apologies for misconnection. But anyway, so what we are seeing from the market, I think the key challenges, we can put them in almost 3 key categories. One of the major challenges that are posed by we are coming from COVID-19, and the likes. So number one, macroeconomic challenge, I think would be categorized as interest rate and inflation. These are the global challenges that we have been facing. We noted a lot of regulators have reacted to inflation. We see what is happening in US, and now the rate hikes, discussions. I think that has been along for the past 2 years. The prospect is the inflation targets are now many of the global economy have started to do a lot of tightening, and it's working in the positive directions. And we now see that the US is likely to contain the high rate hikes. So that, according to the inflation improvement. But another thing, I think, another driver that we noted to be a challenge in the post-COVID era last year, but still going to be the main challenge, is the interest rate. So in terms of macro view, these interest rates and inflation will be the major policy factors that the regulators will look at, but will be very key for the finance and investment professionals to look at and offer proper advice. And another one challenge that I see, which deserves a good watch as we move toward 2024 and beyond, is around the geopolitical tensions. And why is it key? Because as we know, the word is the globalization factors. So we trade with each other. So with the geopolitical tensions pose a significant risk to the investment, what type of asset portfolio in which country need to hold. That's another challenge that needs a lot of analytics and advice from the finance investment professional, but any investors, to ensure that the proper returns are coming. So globalization is number two. But the third major challenge that will continue to be relooked across Africa. You know, we're coming from African environment where most of economies, the level of access to finance, access to financial inclusion is very low, and with a low level of infrastructure development. But when we talk about investment, we need a lot of market-determined prices and the likes. So having a lot of low-level financial inclusion, and on one side, you see a high diverse need of economic inequalities, the haves and the have-not. There is a move we are seeing in the number of central bank economies, for example, in East Africa. Taking example of Tanzania, we're also adopting the interest rate-based framework as we move away from the quantitative money easing. So the measure is to promote a lot of economic transferability of profits from the savers and doers, which is expected to stimulate economic development. But the challenge is still ahead, because heavy infrastructure investment required, and also the knowledge in order for the people to have to bridge up the gap from the economic inequality. That will be very key for the finance investment profession, but any investors to look at and see. So ideally, I think you asked me about challenges. So those are the challenges that I see. If we be able to look at and then find the proper solutions, it will be very value addition to protect the returns of our investment. I think let me stop in the challenge perspective. I don't know if I covered well. Thank you.
Thank you. No, Maji, you covered it succinctly. I mean, if you look at the World Inequality Report, what you just mentioned, right? I mean, the poorest 50%, as they say, own just about 2% of the total net wealth. You know, if you look at the middle class, own about 40% of the total. 40% of the middle class own about 22%, and the richest 10% own about 76%. You know, so the inequality is, the inequality gap is a discussion point. And if you look at countries like Tanzania, like Sri Lanka, like Ghana, you know, these are discussions that we need to be having. And in 2024 in particular, we see that perhaps even the richer will become more rich, and the poorer may also go down the hill. I don't know if Madhawa, you want to add anything to the inequality discussion.
Exactly, that's where one of my core areas, as Maji also mentioned, inclusion, financial inclusion, low level. So that's where we more focused. And I think, as I also sounded before this in the discussion, the one area, MSME sector and segment. So good thing is that we can see, especially impact investment funding flows coming more and more to the sector and to reduce inequalities, especially women empowerment projects through microfinance institutions. And also the another good thing we saw as a consultant and impact investment advisors, the family office funding flowing to the impact investment segment. So I think the 2024 will be more advantage because the funding is the biggest challenge for any economy, Issaka. So whatever said and done. And the other thing is that even though the objective of the fund is managing, supporting poverty alleviation, managing inequalities, but most of the funds still focusing big companies with big portfolios. So I'm always highlighting this, and the fund managers should be think about at least medium level size of organization when they analyzing, when they do the due diligence. Always not look at the big balance sheets. Think about the smaller and at least medium level companies who really involving and supporting inclusion teams. That's kind of a comment I need to highlight, where I'm doing this, all my meetings, I'm highlighting this. Good thing is that more and more funds coming to sort out these issues, especially impact investment funding as well as the family office funding coming to the scene.
Thank you, Madhawa. So we are still discussing the finance and investment outlook for 2024. We are still encouraging our audience to put in their questions in all these areas. We are talking about the challenges, the opportunities, and the trends we are expecting in 2024. And so if there are any questions, please feel free to put in the Q&A session. We will proceed as we finish discussing the challenges to look at the opportunities. And I know Madhawa has spoken about the opportunities, in bridging the inequality gap. What are we looking at, and all that. And I know you started off from the environmental, social, and governance considerations that affect portfolios. We know as investors, I mean, majority of the time what we are looking at is our returns. And here is the question of ESG coming through. Sometimes ESG investments are like angel investors. They are like investment for a longer period in order to get your returns on your investment. So but there are a lot of opportunities in ESG, right? So I guess the question is, considering the importance of sustainable investing, how can financial advisors or investment advisors or financial professionals sort of integrate ESG considerations into client portfolios such that you'll be able to balance the act of risk and return, and also ensuring sustainable investing? I'll go from Madhawa because you started this conversation earlier.
Yeah. Sustainability is I think, one word for 2024. And good thing is that, as I said earlier, and we must happy that most of the organizations, corporates think about sustainability rather than decades ago. So in that way, we are very we are happy as a professionals in the financial sector. Corporates are interesting for implementing and thinking about sustainable way, but unfortunately, the sustainability has to be measured. So, what kind of challenge is how to measure the sustainability, and for that, data is the biggest thing is the data. So, better data give better insight into the impact. So, the reporting side of sustainability is the most important part. We can see, even though corporates want to implement and adapting sustainability, but the reporting side and measurability is the lacking area. So I think the corporate organization need to be more focused, as well as the professionals in the financial sector. We must have some sort of formats, models to evaluate and measure the sustainability.
Awesome. Awesome. Thank you. So I mean, you made mention of 2 points I took note of, and it's always been a challenging task. One, you mentioned measurable impact. So when you're talking about ESG, obviously what you want to look at is how the investment has really impacted the community or the environment as you
That has to be measurable. That has to be measurable. Then only the investor is happy. In the day, it gives both dual returns, both social returns as well as a commercial return. But investors and financial community need to see the impact through the numbers.
Definitely. Yes, Mr. Maji, you want to make any comments on ESG considerations into investment, client portfolios?
Yes, Issaka. I think in the modern way, as we looked at the possible challenge that the world has faced and will continue to face, and the possible solutions that we had. However, in the same environment, we are seeing opportunities. In every challenge, there is opportunities. So if you summarize the opportunities in two key, one, I may say ESG investment is one, and is now attracting the global attention. And not only attracting global attention, it's a way to go, because about carbon issue across the globe is for our human sustainability. So ESG investment is one of the key. But number two, apart from that, then I give another one is technology. Technological innovation has also been one of the key. So ESG and that. So how can we now, as finance and investment professionals, then advise our clients or whoever so that we can benefit out of these opportunities? I think number one is for any investors to try to incorporate ESG criteria into the investment selection process. That's which is aligning with the client values. So, for example, in companies that are very strong in a framework, the diverse board of directors and also ethical business practice, that will be key to focus in terms of promoting ESG, but also achieving the benefit. But another thing that we need to watch as we optimize this opportunity, I think for investment, they now focus, or advisor should be investing in sustainable investment options, the likes of green bonds we are seeing. Even in Tanzania, even the bank that I work for, we launched the green bond last year, the first in East Africa, but also Sub-Saharan Africa, which drew a lot of attention and subscription. So we see a number of players coming. So these renewable energy projects, I think, will be one of the areas to promote ESG principles in our investment and return. Another factor that we need to watch, I think we talk about low-level financial inclusion. So how can we now assist people to get the knowledge of ESG in line with the business decisions? Because we have been using the return without looking at sustainability matter. So I think financial inclusion in terms of financial literacy, in ESG investment, what are the opportunities to our investment so they can pack and make good information. But from that, the financial literacy in Africa overall is very low. So how can we now, as a finance investment professional, assist people to get information? So I think we need to invest in ESG research and also data simplification so that the people can digest and use those analyses at least to make informed ESG type of investment. You get the return, but sustainability. Lastly, from the ESG point of view, I think in African markets, most of the economies are government run, because government being the major player. So I think it is key now for investment professions and also players in that field to look at the ways how we can collaborate so that we can convince this decision maker to incorporate ESG framework in terms of policy development, so that we can have a very plain ground, so that we can do business in the more sustainable but in the profitable way. So I think if you do these 5 key things, we'll be able to make a big stage to optimize opportunities in terms of ESG, but at the same time, we can make use of the integration and then technological development through structured projects that as mentioned. I think that's what I need to add from that. Thank you.
Thank you very much, Maji. I think it's very, very important, the points you have raised. And I think one other thing that has become very interesting is also the fact that a lot of companies are looking forward to government incentive for them to invest in ESG. So we have typical economies where governments are giving some tax reliefs, some tax incentives for organizations that are willing to invest in ESG. And I think we need to encourage regulators and governments to look into some of these things because, I mean, as we said, I mean, the client is always interested in their returns. You would have some of them coming to, look at what are the sustainable ways you are investing, how is that impacting on our environment and all that. And if you're able to get some government intervention in terms of incentives, I think that would be a great way to motivate a lot of investment advisors and portfolio managers to go into it. There are still a number of questions coming through, and I'll take them whilst we go on. At the moment, we want to finish our discussion, and then we'll provide the feedback to our panelists to speak on. So Maji, you spoke about financial technology, fintechs, and how the opportunities thereof are also coming up. Recently we've seen artificial intelligence between 2022 and 2023. Just by the mention of ChatGPT, everyone knows what it's about. Now we've seen the integration, how it's going. I mean, big data, artificial intelligence, all these things are really shaping the financial landscape, right? What are your thoughts about the opportunities that lie in there? What are the silver lining that we can tap into, technology advancement or just the fintech space for the financial landscape?
Thank you very much. I think you mentioned a very key, important point. As you know, and I'm coming from Tanzania, East Africa, we've been very good in that innovations of fintech in terms of financial integrations or intermediations to improve financial inclusion. The result has been very positive. But as you say, every challenge or opportunity, every challenge comes with opportunity. So fintechs, however, they created a challenge, but I think there are so many opportunities in that place. Number one, I think the organizations or investments now, we need to streamline payment process because fintech, they provide a seamless payment. So streamlining the payment process through mobile payment apps, for example. In East Africa, we have M-Pesa, we have Tigo Pesa, so many mobile payment solutions. So we are seeing even the banks now coming up with the mobile payment solutions. For example, the bank I work for, it has got a very good tool, streamlined process called SIM banking. It's integrated, all the payments, even the full open KYC type. So I think the streamlined process with the integration for this app, blockchain, SIM banking, mobile technology will, number one, I think will facilitate the opportunity for investment. Number two, through the fintech, I think we may also see enhancing access to financial services for underserved populations, because for them to get a bank account, they perceive to be expensive. So by having these fintech solutions, I think we can reach. So the good example of this penetration is East Africa, Tanzania, Kenya, Uganda. You see, if you look at financial inclusion, the banking sector is less than 22. But when we incorporate these payment solutions like Vodacom, there's Tala, Nala, Kiva, I think they are very common. So these make the financial inclusion go maybe 60% to add that population. So that enhancement is very key. I think another point, the third point for that is fintech also can assist us to improve risk management and compliance, because now we talk about AI, artificial intelligence. So this can easily invest in, for the big bank companies with a lot of capital, they may acquire the artificial system, then incorporate AI in it. And that's way it can easily motivate people to save, and that might increase the financial integration. But another factor, before I say, I also see that when we look about fintech, we talk about automation of investment management through maybe robo-advisors currently, or algorithm trading is coming up. So this symbolizes and promotes people now to create investment culture. So people will start acquiring small stocks in the capital market or debt instrument. For example, in Tanzania, we have the Dar es Salaam Stock Exchange linked with a brokerage. So you can trade or buy small stock holding through the mobile phones, just a click of button. So automation will be very key through partnership with fintech. But lastly, not the least, I think with the fintech, it will facilitate crowdfunding, crowdfunding, and also peer-to-peer type of lending opportunities might also come with these online platforms. So when we focus this, we can see individual connect to the investors, and then they can easily get access to the information and also make very informed type of investment. So that will increase the base for investment, but at the same time, will promote saving culture, price discovery, and all more market instrument that we are missing. The global is having, but Africans, we can catch up through this fintech development. I think, let me end up there for a few contributions I have. Thank you.
Yes, thank you very much, Maji. And it's a very interesting conversation. I've seen a number of our audience post questions around this area. We'll come back to that shortly, but let me go to Madhawa to also talk to us about how the technology, landscape and the fintech space, opportunities that we can tap into going into 2024.
Yes, Issaka, and very impressive answer given by Maji. And I'm very impressed because I'm also coming from fintech side, where I am heading business development side for Africa region with fintech company 2 years, 2016 to 18. And very right. And what we can do is, what we can expect through technologies to improve efficiencies, connectivity, reaching the mass scale, reaching the people, especially as Maji mentioned, can improve savings level, improve financial literacy levels. We can send the messages, send the guidelines, can connect with farming, communities, supply chains, value chain. Most of the things can connect, but for a certain segment like financial inclusion, in addition to the technology to improve the quality level, but we need sort of human touch. We are working with vulnerable communities. We cannot 100% depend on community, but we need sort of human touch to guide them, because especially as again I'm mentioning, Maji said, still banking is 22 some percentage. That means majority of the communities still excluding. To bring them in addition to technology, we must have human touch for proper, fruitful, and successful implementation. Thank you.
Thank you very much, Madhawa. So now there are a lot of questions that have come through. I don't know if you are seeing the Q&A session. So this is where we'll pause and read some of the questions that have come through, and then we can wrap up very, very quickly. So my first question comes from one of the audience, Ahmed Ibrahim Tanko, and he wants to understand the investment advice you give for corporate bodies, right, in the face of these challenges that we are faced with, especially around the fixed income market in Ghana. And I know the market in Ghana are very similar to that in Tanzania, and in some instances, apart from the fact that Sri Lanka has now a single-digit inflation, our markets are quite similar. So our audience wants to know what we should be looking at in terms of the challenges with the fixed income market in the various jurisdictions. I'll pose that question to Madhawa.
Yeah, honestly, I can't give you a technical level answer for this. I prefer to answer by Maji, because he has more technical sound for that answer.
Sure, Maja, the baton has been passed to you.
I think no problem. I'll try to touch base on that. So when we discuss around challenges, so we say most of the challenges from a macro space is coming from the inflation and interest rate. So the person who asked the question is fully aware the impact of inflation and interest rates in terms of bond holding portfolio, because it tends to erode the value of that investment. So I think that being the major challenge, and will continue to be the major challenge, I think 2024 and some few years, as you see, the global is having a lot of political changes. Most of the big economy are now going through general elections. So we anticipate these market dynamics in terms of inflation, interest, however, being contained, will still to be a challenge. But what advice that are we giving to the corporate investment as investors, but also the companies? I think the success story for that is aligned with your ability to manage the key drivers for the economy. Number one, if you are able to manage interest rate inflation, at least how? In terms of actual strategy, we need to have a clear, comprehensive risk management strategies to maintain both inflation and interest rate fluctuation investment. That is a key tool that it may help to make a proper investment selection, But two, apart from having the corporate risk management strategy to manage this inflation interest rate for a successful bond investment and selective portfolio, we also need to stay on top of major indicators. So being a small investor, but a company, need to look at the major economic indicators and the market trend. Why that is key? Because it helps us to anticipate potential changes in inflation rates and interest rate, which erode the value of the fixed income asset portfolio. But another factor that, or something that we need to do, I think we need to look at diversification of investment portfolio. If we are making the new investment, how do you do that? You diversify in order to manage the risk of erosion. You diversify investment portfolio across different asset classes. Why is that key? Because we reduce risk vulnerability in terms of inflation and interest rate. It allows the absorption power in your portfolio. So you can diversify across markets or asset class. So that is the third item that we recommend that should be done. But another thing that we can do is we can consider also hedging strategies, such as derivatives, or we can do the vertical fixed income securities between the market traded and non-market traded diversification, and to make sure that you are hedging the risk that might be posed by inflation, also interest rate fluctuation. So we also see the current devaluations comes in. So I think hedging strategies also protect the investment, because if you're investing across different geographical locations, you may be exposed with also currency risk. But I think the fifth action that I would recommend is because these drivers, we know that they have been there before from post-COVID. Now we are also seeing a lot of geopolitical tensions. The factors are still the same. So the demand push, supply demand push type of pressure is expecting to continue. For that to make selective investment and also to rebalance your fixed income, especially bond portfolio, I think collaborations with economists, reports you need to read, but also financial advisors, analysts, so that they can see what asset classes are coming out as a good investment in this environment, so that you can diversify your portfolio and be able to invest. So I think if you implement these 5 key strategies, you'll be able not only to protect the market pressure that are coming from both interest geopolitical tensions, but also you will be able to diversify your risky portfolio until when the market improves. I think let me pause there for any further question.
Thank you. I think you have largely addressed it. I mean, the challenges with the fixed income market. I mean, the points you have mentioned in terms of having a hedge, or in terms of having a diversified portfolio in order to sustain your investment, it's very key. The second question comes from two two people, but let me try and combine them so that my panelists can answer. So it's in the area of ESG. So the two questions suggest that investment in ESG is very insignificant if you compare to the total investment portfolio that most organizations have. And if you also consider the fact that ESG has largely been adopted by bigger corporations, and if you look at the African market, majority of our businesses sit in the informal economy or very small, medium, micro enterprises, right, who basically have very different ideas about what ESG should be and its impact and even its reporting. How do we then ensure that the impact of ESG are brought to the fore from a global or a larger perspective, given that majority of our businesses are micro, small enterprises, and even for bigger organizations, if you consider the investment in ESG as, compared to the larger portfolio, it seems very, very, very insignificant. Madhawa, I see that you are nodding your head. Maybe you want to take this one.
Yes, Issaka, I can add something on that as highlighted by Maji. The best option is technology. Technology, as long as the majority of the community under micro and small level, so we can easily touch mobility, communication. Through the communication, we can bridge that gap. That's the only option to reach the masses, because you can easily you can touch one button to change the language, and we can use the messages, we can pass the information, get the information to the local language. So that's what technology is supporting for reporting. We cannot expect the small people, micro level people, expecting the more higher level numbers, figures reporting, but we can modeling some sort of reporting and information sharing through the technology. That is the best option, is using technology, either blockchain or AI or whatever way, through the different platforms, connect with mobile connections and connecting with them.
Definitely. So, I mean, I'll read the last question because of time. It's a question that for me has come severally to me, and perhaps once it's come up in this platform, let me also pose to my panelists. Is it advisable to invest in digital currencies in Africa in 2024? It's a straightforward question. I know it's something that my panelists want to talk about. So let me give each other an opportunity to touch base on, is it advisable to invest in digital currencies in Africa in 2024? Mr. Maji, go first.
Thank you for a very good question. I think it's one of the very common question that many people need to, we need to prepare for that question. Is it high time to go to the digital era? Are we from even the financial inclusion from traditional means we have felt that Africa has proven to be a very high rate of adaptability. So we can adapt quickly ahead of the innovators. So that's one area that we need to watch. But I think the key question around that is to try to see what are the key factors that are ahead of us as we look forward. What are the things that will tell us, is it the right time or is it the wrong time to go? But when you look at the key factors that I'm looking ahead of 2024 and beyond, in line with the digital, I say the opportunity there is technological adoption, because the key threat is very obvious. Now we have adopted AI as a key threat. We are no longer, we cannot avoid to escape AI. So technology becomes key. But also in line with that, there will be a lot of regulatory changes to address all these changes in both financial landscape adoption, the challenges the regulator try to adopt, but what are they trying to adopt, to adjust? In simple way, the regulators, the technology will try to address the challenge that we have experienced and will continue to experience. So investment drivers, I think, is guided by the return that we want to get. So number one, we see our return need to be protected and grow. So what we erode return will automatically be the key factors. Interest rate need to be watched. Exchange rate from the globalization need to be watched. But another key factors will be global events. Like I say, a number of countries' economy will go the general elections to change the leaders. So the directions towards either full digital adoption or not will take time based on that. But another key factors, we're operating into the financial sector industry. As you see, COVID, and after this challenge that we encountered 2023, and now we look forward, how can we now move? I think the key takeaway is to watch the economic indicators, because we need to see how the global economy revived to the best level. Emerging market economy was also got a threat during the COVID-19. So now all the projections see that there is a high success rate that the emerging market economy will revive. But the revival would be slowed down as for the geopolitical tension that we are seeing. So if you say about digital adoption for Africa, yes, is a high way to go, but the means to achieve the digital economy, it might not go straight to the digital, to the blockchain technology that the advanced economy have. But for us, I think we can start small, because our challenge is inequality and low level financial inclusion. So that we can promote digital adoption through fintech integration, through literacy. And once we put this infrastructure in the good shape, automatically the payment systems or integration of this is done by the blockchain technology on the back of it. So big companies will come and promote us to do the integration. So we need first to do a lot of financial literacy. We learned a lot to do streamlining our integrations in terms of payment solutions through our mobile platform, simple tools that we can manage to match with our technological level. Then we grow slowly and then adopt the full phase, the blockchain technology in terms of regional settlement or do the international trade. So it's the right time, but we need to do a phased approach through what we can have for the fintech and integration and financial literacy that I can share. Thank you.
Thank you. Madhawa, is it advisable to invest in digital currencies in 2024?
Investing or not in a different, different question, but my view is to add something, being from the blockchain and digital currency background. As long as the ecosystem not in place and the regulators not accepted and the government is not accepted, no point to think about digital currency. But as Maji said, digital currency is one of the best and the future, but the ecosystem and people have to accept it. The regulators have to accept it. The government have to accept it. Other than that, it's a good option.
Right. I think, I mean, I have really enjoyed the conversation. I've enjoyed all the perspectives that has been shared so far. Very, very insightful. And you can see from the comment section that our audience are also finding the session very, very, very insightful. Unfortunately, we are still racing against time. But I can give some 2 minutes each to each of our panelists to just share in terms of career advice. You know, I mean, our universities, our institutions churn out a whole, I mean, in Ghana, it's in the hundreds or tens of thousands of university graduates almost every year. And 60, 70%, a lot of them want to find themselves in the financial environment or industry. What sort of advice would you give young professionals who are intending to enter the finance and investment industry in 2024? Madhawa, you have been in this industry for long. So what sort of advice would you give for young professionals looking forward to entering this industry?
Yeah, thanks, Issaka. So my advice is, as a professional and the person coming from the industry, why the youth, even after tertiary education, going behind for jobs, why youth graduates cannot converting as entrepreneurs. So I think the best option is converting as entrepreneurs and think as entrepreneur, see as entrepreneur, become entrepreneur. So that's my advice, rather than waiting for a job under somebody else.
Thank you. I'm tempted to come to Maji, but I think Madhawa has just put a full stop to that question. If you are thinking about going into the industry in 2024, first think about becoming an entrepreneur. Think about how you create something for yourself. So in concluding, and Maji, I'd want you to take this. What are the key takeaways you want anyone who attended this session to have it at the back of their minds and remember it each time they think about this particular session? What are your key takeaways you'd like our audience to remember this session for?
Oh, thank you very much. I think the discussions today was discussing about finance, industry challenges, opportunities, and how can
Sorry, Joseph, your mic is on mute. Sorry.
Oh, sorry. So I think the key theme it was discussing about finance, investment, and outlook in line with the challenges and opportunities. So one key takeaway for the participant, I would say, it is necessary to stay updated on the industry trends and development so that you can take opportunity when it comes. But another one, I think the key takeaway you see from diverse needs of discussion that we had is business about relationship. So I think it's key to build very strong relationship for a successful investment journey because you need consultation, but it's also key. Without having the proper knowledge of the market, I think one takeaway, we were discussing about different metrics and opportunities. So for that to be okay, each and everyone need to have a diverse skill set, not only focusing in one, but investment is not a direct lessons. It's just end result of what academic background as per original remark. So I think diversification of skill set, and now the most important thing, AI, technology is a key threat. So I think embracing technology is one among the key come out, and we were looking at how can we survive when we adopt technology. So embracing technology, and the last but not the least, for each and every one of us, education has got no end. So I think embracing the continuous learning is a success for any investment and finance professional guy. So in that short note, I think those are the few remarks that we need to take away in our next journey. Thank you very much.
Thank you very much, panelists. You've been so awesome. Madhawa, do you want to give any final words to our audience?
Yes, for a kind of a key takeaways from my side, I like to highlight as an investor's point of view, the investor must, this kind of volatile macroeconomic situation, investors must demand for a fair compensation for taking the risk and the innovations, technology. And other thing is that the globalization, economies cannot stand alone developing. They have to combine with other economies. So partnerships will be a key, another advantage.
Thank you so much. Thank you so much, panelists. So there you have it, audience. A very insightful session. Wrapping it up, stay updated, to ensure that all the information, all the necessary insights you need, you can have them in investing your clients' funds, build strong relationships within the country, outside of the country, to ensure that you are growing yourself and you are growing your funds. Build diverse skill set and knowledge, and embrace yourself with technology, and ensure that continuous education is always something that you never fall behind. At this point, I'll thank our panelists and throw back to Gifty for the rest of the conversation. Thank you very much, Gifty.
Thank you very much, Issaka. That was so insightful. I mean, matter of fact, I really enjoyed it. Just before we go, and even before I even say thank you to all our speakers, we have our country rep from Bangladesh who wants to add a thing or two in 2 minutes to the conversation. So Nur Alam, if you're here, kindly talk to us.
Thank you, Gifty. Thank you very much. Am I audible?
Yeah, you're audible.
Okay, thank you very much. And I was actually listening the fantastic discussion from Mr. Madhawa and Mr. Joseph Francis Maji. And the moderator, Ibrahim, Ibrahim also very nicely moderating this session. And the topics is very much important, and I like this topic very much. ESG, investing on ESG is most important nowadays. And this is my subject, and I'm working on this from Bangladesh. As you know, very recently, we have attended a conference organized by the Institute of Company Secretaries of India that was held in Uttar Pradesh, the actually north state of India. That was a very important session. The Vice President of the Indian government and also the governor of the state of that state, the Uttar Pradesh, also attended at that session, and I was one of the discussion on this topic. And among the 4 panelists, one from England, myself from Bangladesh, and one from Hyderabad, India, and one from Malaysia. Yeah, we actually jointly attended that technical session on ESG. So the ESG is very important now for the sustainability of a company. And I was actually listening the most important discussion. Joseph Francis Maji was actually elaborating on this session. It was very fantastic discussion. And so the companies are now thinking, and like Bangladesh is a fantastically growing economy, globally recognized as the very fast growing economy, Bangladesh. So in Bangladesh, still there is no framework to mandatory reporting for the ESG. Where the companies are investing for the ESG, there is no actually framework so far actually issued by any regulator in Bangladesh. But even then, many of the companies, hello?
Hi, we can hear you, Nuru.
Yes,
hear
go
you.
ahead. Yes.
Yeah, so many of the companies in Bangladesh, they are investing a huge fund for the actually protecting the environment and protecting the people from the actually hazardous. And so how the burning of the fuel and can be reduced, and recycling of the power energy. Many of the company are investing, and very recently the Bloomberg reporting captured 7 company from Bangladesh, which included two financial banking company, even a telecommunication company, and a pharmaceutical manufacturing company. This 7 company was named in the Bloomberg report for compliance to the ESG requirement, although there is no mandatory requirement. But very recently, the Central Bank of Bangladesh issued a guideline for the financial institution and banking companies to comply some extent for protecting the environment and development of the society, and also development of the governance. So this is growing in Bangladesh also, and this type of actually webinar and seminar is time demanding. Now I think as frequently as we can organize such discussion and attract the audience to participate, that would be very good for the economy and sustainability of the global economy, even individual countries' economy. So I think it's good, and thanks to the CGIA Institute for organizing this session. And also I would like to thank the discussant moderator. So that's all. Thank you, Gifty.
You're welcome, Nuru Alam. And so that was the country lead for Bangladesh, the CGI Bangladesh Network, Nuru Alam. Thank you so much. On this note, I would say a very big thank you to Madhawa who actually gave us quite interesting perspectives on the topic for the day. And then Joseph, Madhawa is joining us all the way from Sri Lanka, and Joseph Maji all the way from Tanzania. And we had our most competent moderator, Issaka Ibrahim, who is in Ghana at the moment with us. And it's been a very fantastic session. Thank you so, so much. A big thank you to all the speakers, moderator, a big thank you. I saw a lot of you asking questions also about the CGIA and the CGIA website. Please, I provided answers to those questions. Visit our website, www.cgiinstitute.org, and then let's take it from there. We are always available to assist you. You can personally connect with all the speakers on LinkedIn. Madhawa is on LinkedIn. Joseph Maji is on LinkedIn. Ibrahim Issaka is on LinkedIn, very active on LinkedIn. And even our country rep, Nuru Alam. I would also mention that Joseph is the country lead for Tanzania, the CGI Tanzania Network. And so you can connect with all these speakers on LinkedIn, and then let's take the conversation further. Like Nuru Alam said, if we create more of these platforms, it helps us create the better narrative and see the way forward for the betterment of the industry. On this note, once again, my name is Gifty Boatma Anan, and on behalf of the CGI, I want to say a very big thank you. Thank you for your time. Thank you for joining us. Until we meet again, we have our next webinar coming on next month, and we'll share the details with you as and when we get all details ready. Thank you so much, and enjoy the rest of your day. Thank you.
Thank
Thank
you.
you.